Good morning, it's today again. Welcome back to Joseph's Reserves. I'm Joseph, and I store 20% of my income in the form of rare coins and precious metals. If you had only watched the headlines this week, you would think that the metals market is falling apart. We had a sharp crash across gold, silver, platinum, palladium, and even copper, all within about 30 minutes. It looked dramatic, it looked violent, and it looked like something broke. But when we zoom out and look at the weekly closes instead of this 30-minute panic, we can see that the story is completely different. Congratulations to Emmanuel for getting to my comment section first in yesterday's video. Thank you for all the support. Find Emmanuel down in the comments to start a conversation. The difference in outlook when zooming out is exactly why I track weekly data. Not because intraday moves don't matter, and not because volatility isn't real, but because weekly structure tells you what actually held. Markets spike and markets drop. Stops get triggered and emotions flare up, but where we finish the week tells you where the conviction actually sits. So instead of reacting to the noise, let's walk through the numbers and talk about what they actually mean. Earlier this week, we saw a sharp move down across every metal. Gold, silver, platinum, palladium, and even copper dropped. And it happened fast. Moves like that shake confidence. They trigger liquidations and punish leverage, and they scare the short-term traders. But by the end of the week, much of that move had been absorbed. And that's important because absorption is very different than a collapse. So let's see where we actually closed this week. Gold closed at $5,043, slightly higher than the week before. Silver closed at $77.57, essentially sideways from last week. Platinum was around $2,073, flat overall. Palladium came in at $1,718, showing a slight increase, and copper held around $5.87. Gold ended up with a rise of 1.5%, silver a drop of 0.5%, platinum a rise of 0.02%, palladium a rise of 1.2%, and copper a rise of 0.7%. Overall, what we're seeing here when we look at it week to week is that 2 weeks ago there was a pretty significant drop in silver, platinum, and palladium, and that drop continued into last week for silver, but now we have a sideways movement effectively in all three metals. And when we look at it week by week in gold, we're actually seeing only about 1.5 to 2% movements week after week. But the big story here is that this is actually the first weekly close at gold over $5,000. There was a pretty large upswing in gold intra-week about 2 weeks ago that got gold up to $5,500, and it was smacked down to under $4,900, but that was all within 1 week. This weekly close over $5,000 is a lot more significant than you may think. A weekly close represents acceptance. It shows that buyers and sellers agreed to hold value at that level. Round numbers like $5,000 can carry a very big psychological and institutional weight, so closing above it suggested strength, not just volatility. What once felt extreme is beginning to feel normal, and that's how new price floors are built. It's not a spike that matters, it's the sustained close cost that defines the structure. The record weekly close aside, gold closed only slightly higher this week. It's not explosive, it's not euphoric, it's not parabolic, and honestly that's exactly the type of increase we want to see from gold. Gold isn't supposed to behave like some speculative stock. It's not supposed to surge 8 to 10% per week. That kind of move would actually be very unhealthy at these levels. What we want from gold is slow, steady appreciation, small weekly gains, higher closes, calm strength, and gold creeping upward and absorbing the volatility over time. It means that conviction is building. It means that the floor is slowly rising, and that's healthy. Silver, on the other hand, was mostly sideways, and after all the volatility that we've seen recently, that matters. Silver is volatile by nature. It runs hard and it pulls back hard. It overreacts in both directions, but this week it balanced. It didn't break down, it didn't explode higher, it consolidated. 2 weeks ago it dropped 18%, last week 8%, and this week only 0.5%. If anything, this looks like a momentum reversal. When a volatile asset goes sideways after big movements like this, that's digestion. The market is deciding a fair value for now. Sideways movement after volatility is not weakness, it's a stabilization, and stabilization is constructive. And we're seeing something very similar in platinum. Platinum also closed basically flat, an increase of 0.02%. It's not much excitement, but holding steady after such sharp volatility is stabilizing. 2 weeks ago, platinum dropped 21%, then last week 3%, and now just a slight rise. It seems like we found a new definitive floor around $2,070. It tells you that sellers didn't overwhelm the buyers, and sometimes the strongest signal in the market isn't dramatic movement, it's resilience. Platinum's ability to hold its ground right now suggests a stability that isn't always there for this metal. Then there's palladium, which showed a slight increase. Again, not dramatic, not headline worthy, but definitely positive. 1.2% is interesting because palladium has lagged for quite some time. And when a lagging metal starts to show small weekly strengths while others are consolidating, that can signal selective rotation. It's subtle, but subtle shifts often precede larger movements. And finally, there's copper. Copper held steady as well, actually with a 0.6% increase. But this one matters more than people realize. If copper were collapsing, I'd be a lot more concerned about broader economic weakness. Copper reflects construction, manufacturing, and infrastructure, the real-world demand. Right now, copper is holding firm, and it suggests that industrial demand isn't falling apart. Since silver has both monetary and industrial components, copper's stability is supporting the sideways narrative in silver, as well as those in platinum and palladium, which are mostly industrial metals. So what's the big picture here? When we zoom out, what do we really have? All metals are sideways this week, gold and palladium slightly up, and that's not chaos. Yes, there was that 30-minute crash, but zooming out can show us really how minuscule that was. The market is really just stabilizing, and the underlying structure is still intact. You can now write me at Joseph's Reserves, 10160 Highway 242, Suite 800, number 401 in Conroe, Texas, zip code 77385. Make sure to include your information so I can write you back. I actually did get 2 letters in the mail yesterday, and I'm going to be recording another video of me opening those letters and having a bit of a mail call. So if that's something you're interested in, look for that video. In addition to that, I'm going to be having my weekly live at 7 p.m. tonight. That's in Texas time. And I'm starting to do that every Saturday, so feel free to jump on. If you like this video or this type of content, make sure to go down and give it a thumbs up. Go down into the comment section for any questions or comments. Make sure you subscribe or share the video. But most of all, thank you so much for watching. And just remember, every ounce adds up. So no matter how small, just keep stacking. Feel free to stick around to watch some nice looking coins.